halfway through May, and investors had a pretty good start to the week. The S&P 500 and the Nasdaq closed at new highs thanks to a rally in the price of oil that lifted energy shares. Technology stocks also helped out, and the result was a record close for two of the three broad major indexes we follow. The Dow Jones Industrial Average advanced 85 points to 20,981. Nasdaq up 28 to a record, and the S&P 500 gained 11. All-time high there as well. But volatility remains sort of suspiciously low. In fact, this is the 14th straight day the S&P 500 has failed to move more than 0.5% in either direction. And that hasn't happened since 1995. And as Bob Pisani reports right now, that's working for the market.
Stocks again hit historic highs today. One of the reasons the market has remained strong is that there's been considerable rotation among sectors in the last year. The market leaders fall back, and they're usually replaced by market laggards. It happened again today. What sectors have lagged the markets this year? Energy stocks and bank stocks. What led today? Energy stocks and bank stocks. Energy was particularly prominent. Oil was again back near $50 as Saudi Arabia and Russia announced yet another extension to their agreement to cut back supply, and now extended it through the first quarter of 2018. Big oil stocks all traded up on that news today. Now, stocks have been strong because risk has been lower recently. Earnings guidance, for example, for the year has been strong. That's good news. The global economy is improving. That's good news. And the geopolitical risk from Europe is much lower thanks to France. Also good news. Now, the traders have been complaining about the low volatility, but that's historically not a problem for markets. Stocks can do fine during periods of low volatility. Traders just don't trade as much. So why are the markets in such a tight trading range? Well, it's not hard to figure out. Right now, stocks are relatively pricey. So buyers are not terribly enthusiastic about buying a lot more absent some more catalysts. They'd rather wait for prices to drop and then buy some more. The sellers are not enthusiastic about selling because they see the better earnings and improving economy, and they worry that stocks could go much higher, which is what happened today. The result? You have a tight trading range, though you are at historic highs. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.